Welcome everyone to the digital version of the Consumer Protection Zone. This is an extension of the ICE initiative and aligned this year with the UK Gambling Week, Safer Gambling Week. My name is Eva Bakun. I'm the Director of Industry Insight and Engagement for Clarion Gaming, and then also the initiator of the physical Consumer Protection Zone a few years ago. We launched the Consumer Protection Zone a few years ago as a physical section of the ICE show floor, to showcase innovation in responsible gambling and actually also to host discussions on this important topic. It was around that time that responsible gambling was quickly accelerating its roadmap from being just a compliance issue to becoming a top boardroom priority. Regulatory pressure has been increasing rapidly since then, and the recent few months brought forward some of the regulatory measures often disrupted by the industry as not evidence-based, nevertheless justified in the eyes of policymakers and those shaping public perceptions of the industry. With the shift to online, I think we have also noted the extra care needed to safeguard the consumer, and all of that against an increased focus on well-being and safety brought by the threat of the virus, which makes this year UK Safer Gambling Week and our Consumer Protection Zone coverage so much more relevant. Digital Consumer Protection Zone offers a broader content package this year, brought to you by the ICE team and the IGB team, and inclusive of articles and webinars on the key issues around consumer protection. So apart from joining us today for the webinar, and then tomorrow and hopefully on Thursday as well, make sure you also visit igamingbusiness.com for your daily portion on consumer protection articles. Focus on a variety of issues from international perspectives, so responsible game design, research, education, treatment, sustainability, women in gambling. Today, we're focusing on individualized versus blanket approaches to responsible gambling, an issue that's been discussed broadly in the industry over the last few months, including some of the ampersand digital roundtables that I hosted. But what we will actually find out that it's not necessarily such a clear cut. The speakers we are hosting today are right in front of you, and they are Daniela Johansson, Chief Responsibility Officer and Deputy CEO for PAF, Maris Catania, Head of Responsible Gaming and Research for Kindred Group, Scott McGregor, COO for Be Better, and the session will be moderated by Dan Waugh, partner at Regulus Partners. And before I hand over to Dan, let me just say, as you listen to this webinar, you can put forward your questions through the questions functionality of the platform. We will be collecting those questions and putting them forward to the speakers towards the end of the session, the last 10-15 minutes. The session is also getting recorded, so you will be able to listen to it later on and also share with your colleagues. Thank you so much. I'm going to take myself off camera right now and handing over to Dan.
Goofed already. Thank you, Eva. Stand on now. Thank you for inviting us here to talk today, and thanks for everyone for tuning in. I think along with the rest of the panelists, I probably feel something about a veteran of these industry events, and I think when you do so many, you reflect sometimes about whether any of it sticks. And so to prove that it does, and to prove that all Clarion's efforts are worthwhile, I'll start off with something that was said at a similar conference about 6 years ago. And if you just bear with me, it's a slightly long quote, but it goes as follows. We believe that the way to make gambling regulation work is to shift the focus of regulation away from the sort of blanket controls that underpin current gambling legislation, like limits on machine stakes and prizes and machine numbers, and tailoring it much more closely to individuals. The idea is that you can bear down hard on gambling-related harm, providing the help and the interventions for the people who really need it, while leaving normal safe gambling as untouched as possible and providing space for the industry to innovate and, yes, grow. Now that was said, those words spoken by a chap called Matthew Hill back in 2014, and at the time Matthew Hill was in effect the number 2 to Jenny Williams at the Gambling Commission in Great Britain. And I think we can sort of applaud the sentiment, but 6 years later, I think the consensus would be amongst the industry is that significant progress has been made to raise standards of protection for consumers, and particularly tailoring it through the use of diagnostic analytics, through improving staff training and culture within organisations, through better onboarding of customers, through the development of tools that customers find useful and encouragement for them to use them. And we might question whether progress has been fast enough or whether it's been evaluated with sufficient rigour. However, it's difficult to escape the sense in 2020 that these advances in operator-led safer gambling initiatives, and particularly initiatives aimed at the individual consumer, that as fast as these have come in, the tighter the regulatory environment in Western Europe has become. And indeed that the concern for normal safe gambling, or for businesses to be able to grow, appears to have almost disappeared. So with that introduction, and the panelists may well not agree, and you listening in may not agree, but I thought we'd use that as a bit of a jumping point for discussing this subject. By the way, I have got some questions here, and the panelists know what the questions are, so they've all prepared their answers. It's far more interesting if they're asked questions they don't know are coming, and we can see their look of panic on their faces via Zoom. So if you have any questions you'd like me to ask them, please fire them in, and Eva will pass them on, and we'll try to get through as many questions as we can. Okay, right, with all that done, I'm going to start off with the first question, which I'd like to ask to all panelists, and in the interest of fairness, go alphabetically. And it's this, to really ask, you know, is this a point of tension? Is it a question of targeted controls or blanket restrictions, or do we need to do both? Is the challenge really to make sure that they work in combination efficiently? So Daniela, can I pass that over to you?
Absolutely, and it's an interesting question, and my short answer is that believe that both of them needs to be there. I think if I'm thinking from a PAF perspective, I strongly believe that the individual approach is really important when it comes to responsible gaming, and we're working quite a lot with looking at gaming patterns and behaviors and contacting players and doing all of that. But at the same time, we also feel that, I mean, at some point we need to intervene maybe a bit more strongly, and that's why we have also taken like the decision to also introduce a loss limit cap. So we have taken the approach to have like both. So that's how we see it.
I've completely realised the panelists all prepared their introductory remarks there, which I've completely stepped over. Daniela, in addition to that, do you want to say anything else by way of setting out the position for PAF?
Absolutely, I can do a short introduction as well. So Daniela Johansson, Chief Responsibility Officer and Deputy CEO of PAF, a gambling operator in the Nordics. For those of you who don't know PAF, we were founded quite many years ago, a bit more than 50 years ago, and our mission is to create profit for the benefit of society. So we were actually founded by a number of charity organizations such as Red Cross and Save the Children. And that is kind of the foundation for how we work today. So responsibility and sustainability is really important. And when it comes to responsible gaming, we really try to have like a genuine approach, see what we can do to actually help the players that might experience problems. And of course, that you also mentioned, Dan, I think that I mean, we are in the entertainment industry, so we really need to like innovate and have a super good gaming experience, but at the same time care for our customers. So that has been the approach that PAF has taken, and we have also taken the approach to try to drive like initiatives as well in the industry, and trying to be a bit bold sometimes and doing new things. Started quite early. I think it was now 12 years ago with proactive contacts. We have introduced a treatment insurance 10 years ago, and all kind of initiatives. That's kind of our standpoint.
Great, and thank you for not getting knocked off your stride by my misordering of the questions. Maris, do you want to give us your introduction and perhaps also pick up on this point in your response about this balance of tailored versus blanket?
Sure. So hi, I'm Iris Catania. I'm the head of RG and research at Kindred. Kindred is one of, I guess, leading operators in this industry across several jurisdictions and several regulatory markets. Yeah, I mean, from our end, obviously, responsible gambling is very important, and we try as much as possible through collaborations with academics and research. When it comes to the individualized controls or blanket measures, I'm a firm believer more on the individualized controls, because what can be okay for me cannot be okay always for others. When it comes to blanket measures, I think I would look more into the commitment that the companies should have. So at companies, all companies should have the same commitment, which is across not just the responsible gambling team, but the board of directors, the exec, and everyone. And when it comes to customer interaction and customer detection, I think individualized control can really help, because you can take into consideration the affordability and different factors to help really minimize harm.
Okay, Scott?
Hi there, I'm Scott McGregor. I'm COO and one of the co-founders of Be Better. We work primarily in the UK market as a service provider with licensed operators, providing them with affordability data to meet the evolving standards of regulation. I'm sure it's no surprise, but regulation is changing here, and we're a service provider to assist operators on that. We're independent. We're backed by a number of high-profile individuals in the industry. One of our directors is Clive Hawkswood, the former head of the RGA. We're also lucky to be supported by Mark Blandford, the founder of Sportingbet. And to answer the question with regards to controls and blanket measures, I don't think it has to be one or the other. I think it can be a combination. I'd say there is no one silver bullet on this matter. But to add to that, I think it's worth making a distinguishment between blanket controls, which can never be released no matter what, such as potentially, I think it's deposit limits in Sweden, or potentially the limits of stakes on properties in the UK. Whereas there are also blanket limits out there, or blanket approaches out there that can be released by individualized controls. We're seeing this in the UK. I know that we'll probably mention it a little bit later, but there has been a suggestion of kind of affordability assessments at the £100 mark. I'd say that is a blanket approach in general. However, it would be released by an individual control, which would be specific to that individual, ultimately doing some kind of affordability assessment, whether it's through us or through actual source of funds or source of wealth, and ultimately deciding whether that person should be permitted to be gambling more, ensuring that it doesn't cause them harm. One other thing I'd say is that the regulators have been clear out there in the past that there is a variation in customer bases, and that should always be considered when regulation is put down.
Thanks, Scott. I'll stay with you, Scott, actually, if I may, and then come to the others. But do you think that regulators or regulatory regimes for gambling have traditionally been set up based upon a set of rules and prohibitions and prescriptions, such as stake sizes and things like that? And that's the territory where regulators tend to be quite comfortable, because things tend to be fairly black and white. How comfortable do you think regulators are in a more tailored world, despite having perhaps asked for it? How comfortable do you think they are in moving away from hard and fast rules to more tailored interactions?
It's hard to say. I'd say, first of all, just looking at the UK specifically, they did release a number of guidance notes in the past, and that was taking a bit more of a tailored approach, letting the industry use their own rules and determine when things like affordability assessments should be conducted. It's clear that wasn't necessarily adopted wholeheartedly by the industry. I can't remember the exact numbers, but there's 40 ongoing cases with regards to investigations at this point, and over 25, I think, where social responsibility is at the heart of it. Ultimately, I think they have given the industry the opportunity to use this kind of outcomes-focused regulation, and because it wasn't necessarily adopted by all operators, it's meant that they've now felt like they've had to move forward to a more prescriptive approach, make it a bit more black and white. And that's why we're seeing the consultation come out as it has recently.
Thanks, Scott. Actually, Maris, could you pick up on that? You know, it's because Scott's right. I think the Gambling Commission has given fair warning on lots of these issues in Great Britain. But to what extent do you think it's reasonable for the Gambling Commission to impose new requirements based upon sort of partial non-compliance, if you like, or should the leading operators in the industry be given greater opportunity to drive progress?
I always think that if there's one bad apple in this industry, all of us will look bad. So, like, okay, there will be some operators that might be seen as leaders, but if the same customer might be hired by another operator, it's not really going to make it any better. So I think at this point in time, sadly, the GC might have to impose, because that's the only way we can get everyone on board to do the same thing. I would rather see sometimes maybe more alignment with research. I would rather try to see that there are certain things that are done because they're proven really help, rather than just thinking, you know, this will help and this will be like the golden stance and the best approach going forward. And sometimes there might be perhaps more action. Just an example that I saw recently actually came through Twitter, where we offer GamStop to customers, but certain operators can bypass this, and they're actually advertised as non-GamStop casinos. So that will ruin, for example, what we do, because we are promoting GamStop. And in those cases, it's good that we have Gamban, for example, where it would block that as well. But then all the efforts are ruined just because there's a few operators that are really trying to get money out of somewhere that they shouldn't.
So do you think, John, based upon that, do you think it would be more reasonable to remove those operators that can't meet the grade from the market rather than imposing potentially onerous restrictions on all operators?
Possibly, especially since some of these are not really licensed, and or maybe make the tools better, make sure that GamStop would actually, you know, like we can have it through Gamban, why not have it through GamStop as well? Constantly scrutinize what we give as tools to minimize harm. Not just the measures that operator is doing that, but is what we're giving good? Should we do more? Should we maybe get the operators to assess more? Should we be more critical of what we're doing and share more of the stuff? Not wait for a fine, not wait for the GC to change something, but actually try to drive this.
Okay, thanks. And Daniela, of all, of the operators on this one, probably of most of the operators in the industry, PAF has been leading on restricting what customers can spend with your €25,000 yearly loss limit, which you're reducing next year. It's 20,000. A lot of the time regulations come in with very little insight on what consumers will think about it and how consumers will respond. So are there any insights from what you've seen in sort of lowering that threshold as to whether customers welcome these controls and you know, and how it affects their behavior?
And that's difficult to answer. I mean, if you're just looking at the loss limit, then I mean, we haven't gotten that much feedback from customers. We have had a few that have been not too happy because they have not been able to play, since I mean it's a limit that goes for everyone. So even though they maybe could afford it, they cannot play. So we have had a few of those, and of course you could argue that, okay, but if they cannot play at PAF, they can play at a number of other operators as well. But our thinking in kind of the thinking with it is also that this could be like an eye opener, and of course, I mean, you could also argue that should we not do it because they could play somewhere else. So we really think that it's important to do it anyway. But it is true that I'm sure that not all customers are appreciating it because they think it's their own decision. But we have also got some positive feedback from a general perspective that they feel that it's the right direction, that we care about them as well. So it's difficult to say.
Okay. And Maris, have you done any research with your customers in terms of how they might respond to, or do you have data on what the typical compliance rate is with requests for banking statements and things like that?
It's really dependent on different markets. We see the influence of culture quite strong on this one. So for example, in Sweden, everything is public information. So it's quite easy, to discuss with a person and say, listen, I've already seen that you have this much, and so we would like to cap your limits to this much. But if I had to do the same thing in Malta, no one would say, we don't say our salaries, we don't say these things. And I think this is a transition that we need to go through where, before, if I go ages ago now, if I go through an airport to board a flight, I like to go through security. I would feel safe. And I think that is the shift that we need to go through, that affordability checks, that these bank checks should be part and parcel of your gambling experience. Obviously, through different providers, this can get easier. So the checks can be done in the back end, but there will always be some teething problems. To pass on to what Daniela said, sometimes obviously the customers might not always be that good about certain things. And that's why I think when you have very proactive systems would help. And not just based on finances, but also based on behavior. Because before a customer starts to spend a lot, you would see other signs. So perhaps when you manage to, imagine if you're a customer and you spend a lot of money and then we come to you and tell you, oh, how are you feeling? At that point, you want to flip the laptop. Like, now you asked me after I lost so much money. But if you can look into other indicators, like how much time they spent online or playing at night, that can actually help engagement a bit better.
Okay, and actually, just a reminder, because I don't think any questions popped in yet, but if you've got any questions, do fire them into via the chat box. Scott, you touched on the Gambling Commission consultation on interactions and affordability checks, and the consultation document it refers to the services that you provide, but it also suggests that while those checks may be valuable, there's a reference there to saying we probably think we'd need documents from the customer as well. What do you think are the risks to consumer privacy here?
Yeah, I think it's an interesting point. I mean, the consultation is clearly still out, and I think it's out till the 12th of January. So it'll be interesting to see where the dust settles there and what ultimately gets enshrined in the LCCP, which we'll see probably at the end of March. One, I would say the caveat that the question noting that we believe that the drafting of the documentation still is consistent with the layered approach to affordability, with the idea that our checks may not be enough in isolation. However, there will always be a point in time that the regulator will require documentation from customers. However, at the earlier stages of screening for affordability, that's where we do see our tools coming in useful. With regards to customer privacy, I think this is key to it. I would say it's not appropriate to be asking every customer for source of funds, source of wealth, even at the low number of the threshold that the regulators mentioned, £100. It's still a substantial size of the customer base. You need to expose their financials, which will be a concern. I would say that individuals are allowed to participate in the consultation, and privacy is something they touch on. So they are keen to hear back from individuals who gamble and how they feel about this. I would say using a check such as ours, which does respect the customer's privacy, doesn't leave any marks behind, really do work hand in hand with the customer's concerns.
Okay, thanks. And Maris and Daniela, do you think there are would you be concerned about thresholds which are set too low, in that might there be an issue with your teams having to handle so many of these checks that it reduces their ability to focus on individuals that really do need looking after? Do you think there's any potential for concern there?
I could start, and I do believe it has like also like from a customer experience perspective, I don't think it's good to have too low limits and start asking for documentation and financial status, etc., and so on. I think it has a negative effect on the customer experience. And of course, I mean, from like an operational perspective, the most important is to focus on the right things. And if you are like to start on too low levels and checking, then of course that could have an impact. So I think that yes, to some extent.
Yeah, obviously when it's too low, it will affect quite a few. And what I'm worried about is that they will play in the black market or somewhere where consumer protection is not really that important. But interestingly, we've piloted a new system which is based more on indicators around the DSM-5. And a lot of the people that were detected would not spend that much money. So to a certain extent, if there will be thresholds that will take more time into trying to de-risk that, we might be missing on people that have not yet reached a threshold. And again, certain thresholds will still be too high for some people. So we need to keep in mind that as well. But again, I think it would be really good to look into more behavioral risk to be able to detect people before they even spend that much.
So with that in mind, and I think probably all three of you might want to comment on this, but we are at a place where the Commission is consulting on affordability checks, and technically it's consulting on the principle, but it almost seems to have accepted the principle, given that it plans to implement. And it's really, the suggestion is really consulting on the level. Do you think that it had to come to this point? Do you think there are things the industry could have done better or faster to have avoided a point where there is a good chance now we're going to have affordability checks set at potentially relatively low levels? Scott, if I can start with you on that one.
I think it's an interesting one because we really do see an array across the industry, being a service provider and having plenty of sales calls. I'd say that the clients who we have on board and are working with aren't necessarily the problem here. And you know, it's clear that they are at least putting a plan together for affordability and putting frameworks in place. However, I do remember having calls with operators not that long ago where their frameworks were still considering affordability and only starting checks in the thousands rather than in the hundreds, which is where we're seeing that the regulatory pressure come from today. I think it's also interesting that the regulator is being influenced here. There's obviously there are other pressures. The House of Lords mentioned that there's a need to prescribe an affordability check. All-party parliamentary group in the UK prescribed or said that it should be a prescribed affordability check. Looking more broadly, I'm sure that the Gambling Commission is keen to take action before any larger changes to the Gambling Act. But I do think that if a stronger framework was adopted whilst these guidance notes were out, then we may not necessarily be needing to see it prescribed like this. I mean, we are seeing our operators and some of our clients who have been doing these checks as early as registration or first deposit, informing their customers of what their limits are, and that's informed by Be Better Check, giving the customer the option to decrease the limits if they chose to do so. If they wanted to increase their limits, they'd then request source of funds, source of wealth. The customer's free to gamble as they please up to that next threshold. And if they do hit that threshold, then that's when we see the need to request the documents that have been discussed. And we'd say if every operator adopted an approach such as that, then I don't think we'd be in the same position where we are today.
Thanks, Scott. And perhaps if I can phrase the question slightly differently for Daniel and Maris. assuming that affordability checks do come in at sort of relatively low levels in Britain, do you think that there might be an opportunity for operators to respond with more targeted approaches that make these blanket controls redundant? And you can answer that in relation to affordability checks in Britain or loss limits in Sweden and Germany. Daniela, do you have a view on that as to whether this is now the die is cast, or whether there's an opportunity for the industry to come back with perhaps more targeted solutions?
If I look at the development and over the years, you can definitely see that the policymakers and the regulators, I mean, they it has kind of we're now kind of into the phase where we see like more stricter regulation and more like blanket approach, and I think it's difficult now to go back. Maybe I think that in several markets the operators have had the opportunity to take actions and work together and show that we can do that, but it's not that easy. It's many parties, and I mean it's business, of course, and it's a lot of money, and yeah, I don't think that we have as an industry succeeded in that. I think we have done a lot of good things, but maybe not according to the policymakers. So I'm not sure if it's possible to kind of go back and try again with something else.
Okay, thanks. And Maris, do you think that you're heading down this path in other markets you operate in, or do you think there are things you can do to prevent statutory loss limits?
I'm going to sound negative, and I know I work for the industry, but I think we've invited everything to happen like this. As an industry, we've been ruthless, and I don't think we can hide on that. And also, we have to keep in mind that one person who gets addicted and loses money, there are so many affected others. There are so many things going on, and we see, okay, maybe we've had companies that would do like systems and stuff, but if we had to go to every company and ask if they have an RG manager, there are still situations where companies don't have an RG manager. If you had to compare the number of RG analysts compared to VIP managers, a lot of companies would have much more VIP managers. And as well, from a social perspective, a lot of people, like even people who don't gamble, they see adverts all the time. I remember going to Sweden and I was sick of our own adverts on TV. And we have to be honest, we can't go back probably because we've just built our own graves to how we operated this business. I remember in one study I did with Mark Griffiths where we analyzed 50 operators, and all I was checking is if they have an RG page, and obviously expecting they wouldn't have any commercial information on that RG page. And 44 out of 50 of these operators had bonus pop-ups coming up. So in all fairness, I mean, we can say that we've done a lot of good work. Some operators, yes, but at the same time, we have sometimes screwed up. So this is the price that we're paying now. And potentially, if some companies don't have these thresholds, they wouldn't even have an individualized approach. Hopefully, the individualized approach is there and it's better, and it can detect people before they reach the threshold. But maybe I shouldn't be in this industry, but I do feel that it might be needed to have harm minimization across all operators and try to minimize harm, especially considering how many affected others and how many families can really be hurt because they gamble too much on certain operators.
Thanks. I think probably even the most ardent advocate for the gambling industry would struggle to defend against that claim that actually the industry has not covered itself in glory in the last few years. However, there's a question about whether the consumer should lose privacy and autonomy on the basis of poor performance by operators. You sort of touched on something there, which leads us on to one of the questions we've had in. I can't say who it's from. It's from Eva via somebody else, but it's the obvious point here is that what are your thoughts? And I think probably start with Scott, because I know your company does some work in this area. But what are your thoughts on the value of an affordability tool when a customer can open 10 accounts across different operators at the same time? this will not be visible, whereas documents requested would show this. So yes, that's true, documents would show it, but equally you've done some work on single view of customer. Do you want to talk about, do you think this affordability is heading down a global limit route?
Yeah, I think it's definitely interesting. The concept of a single customer view has definitely picked up traction over the last year or so. Actually, probably the beginning of this year was the real some real momentum behind it. To make it clear that the regulation isn't there today, so we have actually separated out our product to ensure that we can provide standalone affordability checks, and separately this idea or concept of operators sharing data amongst each other for responsible gambling purposes. I do think it is actually going to be an interesting unintended consequence of bringing in these kind of thresholds, meaning that customers will just change operator when they are requested eventually source of funds or source of wealth. It's definitely a concern of some of our clients, and ultimately there won't be a way to address that until a single customer view is endorsed and addressed by the industry. It's obviously a difficult tool to bring in, because ultimately it needs consensus. We are seeing some work moving towards that this year. Hopefully with our solution we're looking to be future-proof, and we'll continue working on that in the background, but also understand for lots of operators they're not quite ready for it yet, and we'll continue to provide our standalone checks as is.
Great. And Maris, what do you see global checks as being a inevitability now?
Potentially, but I would still be worried that it might push customers to go through less consumer protected websites. And yeah, there will always be a way. I'm sounding so negative in this webinar. I'm usually quite a nice person. But yeah, I think global checks would really help as well. And this would be really good to know, at least, the affordability levels before we have any type of relationship.
Great. And we're getting quite a few questions in here about the role of the banks and financial services in this, and asking whether, and I'll perhaps go to Daniela and then Scott on this, whether the simplest thing is just to try to pitch this into the open banking pool. They already have access to the customer transactions, even if, to Maris's point, they don't have the patterns of play analysis. But would that be the simplest thing to do? Just pass this over to the banks and say, you have the ability to run global checks and impose global controls? Danielle?
It sounds, it sounds really nice and easy to do that cooperation and do that. I don't think it's that easy. And I know that there are discussions ongoing regarding that, but I think that's quite far-fetched. I think that will be difficult to achieve for several reasons. I would be more like, if I'm looking at what would be feasible to kind of achieve, I would rather go for like some kind of global limits that could be shared among operators and yeah, do that. And I know that there are many concerns regarding that as well, but I think that, in today we have, it could be achieved. I would rather go for that one, actually.
Okay. Scott, do you want to say something on the open banking potential?
Yeah, I think it's an interesting concept. It probably is quite cultural. It depends on which countries and whether people are or customers are willing to share that kind of data. I'd say that the UK is still a few years away from that being able to be rolled out upon mass. One, from just customers actually consenting to let it be done, and two, probably it's actually a prohibitive cost. And cost does need to be considered here, because if checks are prohibitively expensive, they won't be rolled out to protect the majority of the customer base, which we think should be a priority for the industry. One other thing would be going back on the concept of privacy and just ensuring that those who are given access to data aren't using it for incorrect means. Seen the ICO active on that in recent weeks. And I think we've got to be careful about what does get exposed.
Right, and I suppose the other thing is,
sorry, maybe a bit far-fetched, but like when I travel, my bank would call me if they see a transaction happening abroad. But what if the banks could do something about it as well? What if they start seeing transactions, coming from Unibet, PAF, Bet365? They see the whole visibility, so they could have also some sort of harmonization strategy that can, obviously they can't tell us as the operator, but they could call the customer and check if everything is okay. It's just a thought. I mean, I had mentioned it to a bank once and they just fired shots. but I think it does make sense sometimes. I get called if I purchase something in a different country, so why not call me if you see maybe a lot of different transactions from gambling operators. I mean, in Malta, you can't get a loan if you have gambling transactions on your bank account. So they know there's a risk sometimes. So why not try to, help your consumer?
Absolutely. Daniela, did you want to say something?
Yeah. Just one thing. We had with PAF. We had quite many years ago. We had a cooperation with different banks, and that was mainly then to kind of educate them when it comes to gambling problems and responsible gaming, because they actually approached us and said, okay, but we see that our customers are spending a lot on gambling sites, and we are worried about the loans, etc. So then we did that and had that kind of training and what they could do and how it works, etc. And they were going to start to do that, and I think that's nice. But I think that's a long way to go then to have like some kind of central banking and all that cooperation. So maybe in 10 years.
There was a proposal in one of the reports this summer in Britain. I'm sorry, I keep referring to Britain. This is a global discussion, but there was a proposal in the report this summer that all online gambling accounts should be linked to a central hub, which would also be linked to their bank accounts, which would also be linked to their credit rating, and that we'd have this sort of central beast sitting in the middle called an ombudsman that would look at all this and would make decisions on what consumers should be allowed to spend. I don't know if anybody particularly wants to comment on that, but it does that send a warm glow into hearts out there?
Yeah, I think the concerns there are obvious. I think it's also important to note that my understanding is that the regulator, at least in this country, doesn't want to actually be the one responsible for setting up that kind of entity, which means that it's going to be not run by them. For an operator, for a provider such as us, to provide something that does link all these operators together is quite the task, and that's why I guess it's going to have to work with the other stakeholders in the industry, such as the BGC and others.
Right, and I'm just looking at the question box there, so apologies if I miss anything. I'm trying to sort of consolidate questions when they're common. There was one on credit ratings. I think we just sort of we can pick that one up. But there is a comment here. It's a comment rather than a question. From an old friend of ours. I don't know if he meant to put his name at the bottom, but he's a former Director of Enforcement for the UK Gambling Commission, but we won't mention Nick's name. And he says, I tend to agree with Maris that behavioural indicators may be highly effective early indications and can be supplemented for affordability screening. But he said that he thinks there might be an opportunity if operators can demonstrate effectiveness in tailored controls that we could move away from blanket restrictions such as affordability checks. So, okay, Nick's been out of the GC for a few years, but there's hope there. There's a question here, again, this is probably one for Scott, but others, if you have a view, where sort of background affordability checks are being conducted without the customer's knowledge. Do you think there's sufficient transparency for the customer? Should the customer be informed at the outset through onboarding that they will be assessed for affordability, or is that already happening?
I think it depends on the type of check. So our checks in particular are designed to be frictionless, or as frictionless as possible. We are using largely open data in our model, algorithmic model on top of that. We're not leaving any marks behind. We're not actually kind of invading any bank statements. we're just providing a best estimate of that individual's financial position, separate to any invasion of privacy. Yeah, I would say that there would always be reference somewhere. Typically, it will be involved in a privacy policy or terms of service. It's down to the operator whether they want to actually get explicit consent for a check at that level. But of course, when it comes to a slightly more invasive check, and when you are, looking at credit or ultimately, doing EDD, that's when I'd say you should be asking consent of the individual.
Okay, cool. Much more. I'm not sure we meant to focus so wholeheartedly on affordability checks, but that's either where we've led the audience or that's where they wanted to go. But I'll try and pick up as many of these as I can. But once the sort of wealth checks have been, once the documentation's been supplied, do you have a view on what proportion of monthly income consumers should be permitted to spend? Anybody want to pick that one up?
I mean, I can say that in our algorithm, we actually do account for that. I'd have to get our data scientist on to give the exact numbers, but people do vary, and I think it brings it back to that individual v blanket approach. It's clear that not everybody's discretionary income when working back from gross income is the same percentage, and it does vary depending on everything from your socioeconomic status, and we do take that into account when providing our estimates.
Great. Okay. And actually, I think that one big question we haven't addressed, and maybe if I can ask this to Daniela in the first instance, is gambling's not the only form of consumption that people get into difficulty with. Rates of compulsive buying disorder are significantly higher than rates of gambling disorder. Most problem debt is not linked to gambling. Do you think that gambling is sufficiently different from other forms of consumption that it should have consumption checks applied to it? We don't control consumption of alcohol, for example. Daniela, do you think that? And I appreciate you're all got an RG hat on, but do you think that gambling is a sufficiently more harmful activity than anything else we might spend our money on, that it means that it requires checks?
That's a really good question. Well, maybe not. I think that maybe the perception, I'm just thinking now from the public is, I mean, the last years we have seen like a lot of like horror stories. You can see like lives destroyed and their finances is like zero. We see suicides, etc., etc., and all those kind of horror stories, I think, is building on the bad brand for the industry, which we maybe could have changed many years ago. So no, I just think that we have ended up in this for different reasons, and that's why we have this kind of quite bad image of the industry and how it works, but definitely, I mean, there are other addictions that also have like a severe, I mean, where you get severe problems. So difficult to say.
Maris, do you think there's genuinely a case to treat gambling different from all other forms of consumption, or do you think it's the case that the industry has screwed it up so badly that this is just a price that consumers now pay?
It's a mix of both. Well, gambling addiction does have the highest suicide rate compared to other addictions. And when you look into gambling addiction and other behavioral addictions, you see that it's the first one to be on the DSM as well. So even from a public health perspective and psychology perspective. On the other hand, what frightens me the most about this addiction is that it can be hidden for quite some time. So if I'm an alcoholic, my family would realize that I'm drinking too much. It will be evident. But if I'm spending my days on my laptop playing, they might not see it because it's easily to be hidden. At the same time, you have any type of online consumerism, which can be the same, But obviously gambling has certain things that will keep you going, like near misses and losses disguised as wins, and that hope that you're going to win and you keep on chasing. So we did screw it up, but at the same time, it is a very difficult addiction that can have a lot of effect on different people without people even realizing. Most of the time when you speak to persons who are reformed problem gamblers, they say, you know, that point my wife find out, and that would be after a few months. Or you'll have people who are binge gamblers and they spend their salary in a few hours and then they have to survive for another month. So it's unique, but I think it does get the importance, or maybe it should get a bit more importance overall.
Okay, thank you. Coming back to the sort of balance between blanket controls and individualized, I've got a question here about to what extent staff are supervising the controls that are automated by algorithms. So I think the question here is, you know, an algorithm throws out a flag. How effective do you think is the human oversight and the sort of human filtering of automated decision making? Does that make sense? Sorry, yeah. I think that's probably one for either Maris or Daniela. Maris, you want to go?
Yeah, sure. So I still think that the human intervention is very, very important, but you can have a combined mix of both. So for example, what we just started now is that if a customer is at a very high risk, there is a financial block. So that's an automatic approach. But then there's a human interaction afterwards trying to discuss with the user. In certain cases where it's lower risk, you might have an automated message. But in others, you need to engage with the person. And depending on the level of risk displayed by the person, you have a level of intervention. And the level of intervention depends on how intrusive it is, depending on the risk, if it makes sense, because it does in my head.
Okay, great. We've got about 5 minutes left, and I'm just trying to get through these questions. But what interesting question that's come in. That's the controls we've talked about have generally been either operator controls or operator checks, or the prospect of state controls and state checks, including, you know, we already have some of them like anti-money laundering thresholds. We haven't really seen, or to my knowledge, we haven't really seen anything that provides the data to the consumer, so that the consumer is empowered in this way. So I think what the question is suggesting is some sort of app whereby the consumer can aggregate all their gambling in one place, where analytics can be run on their gambling behavior in global terms, and where, you know, things like they can set limits globally across all operators themselves. Why do you think we haven't seen that focus on, you know, looking at this from a consumer tool perspective? Maybe Scott, you're the best person to start with there.
Yeah, I mean, it has been approached as one of the solutions for the single customer view. It's actually something that we looked at originally in providing. However, I believe it's easier to deal with the licensees and hold the licensees to account and regulate them if they're not doing what the regulator wants to do. If you do put the protections to the individual, I mean, I'm an advocate of the civil liberty there. But I would say it's difficult for the regulator to regulate ultimately.
Okay.
I could add on that as well, that like from a customer experience perspective, that is quite interesting to kind of see your gambling, all your gambling at once, and being able to control it. Then I guess, I mean, it's more like from a technical perspective, and just like the will to do that, it takes more to kind of get the central system and everyone in it than just doing like one operator at a time thing.
Great.
One thing just to add to that, sorry, would be, you know, I don't think, even though it is operator centric, even if it is, you know, regulator mandated, you know, they can build it into their frameworks. As I said, one of our operators is confronting or not confronting, but advising the individual of the limits that are going to be placed early in the relationship, which I would say is ultimately empowering the consumer and making them aware of how much they're going to be allowed to gamble, and if they do want to increase it, putting the power in their hands earlier on.
Great. Okay, I think we've got time for one more of the questions, and then fortunately one other question we've got dovetails with our own final question. But so the question here is how game providers can contribute to consumer protection, and I suppose, you know, game providers probably can only contribute in terms of blanket controls, but or can they be or can controls around games be individuated to the consumer? Maris, do you have a view on that?
I think we need more research around that as well. And I think the game providers can provide so much more around it. But yeah, blanket approaches might be good, but there will always be the individual involved. But again, I think there should be more collaborations between the game providers and the gambling operators to help this, especially if you can consider certain games perhaps being riskier than others, and it can be another edit to the behavior indicators.
Great. Okay, well, there's a bunch of other questions about COVID, about collaboration with researchers. I'm sure Maris would have liked to have addressed, but we're almost out of time. So I'll pick up on what fortuitously was our last question. There's also come in as the last question in the question box, but here we go. Some say gambling is on the same road as the tobacco industry and mink farms. How do you view the future of the industry in 10, 20 or 50 years? I think we could probably even go closer than that and say, you know, 3 years. Will children be attracted to gambling once they're 18 going forward? But I suppose more generally, perhaps I could take a shorter time frame, like 3 to 5 years. Do you still think we're beginning having these conversations? Will we have settled things down? Will the panic have gone out of this? And will we have dealt effectively with the issues? And what will consumer experience of gambling be like in the future? I think I started in alphabetical order going one way. I'll start going the other way. So perhaps Scott, if I can ask you to sort of take a look at that. Pick a perspective that you like, 3, 5, 10, 20 years. What do you think the prospects are for the gambling industry, and what do you think the consumer experience will be like?
Yeah, I think it's an interesting one. I mean, you really do need a crystal ball with the amount of changes going on right now. There is just so much reading out there, and the industry is clearly in a state of flux. However, I'd say that, first of all, I do think that the current trends will continue. I actually think there will be more blanket thresholds put in, but those will be released by individual approaches after the blanket. I would say that concept of a single customer view, when we are talking about the 5-year timeline, might actually be accepted as the norm. And we talked a bit about culture today, and I think culture will change. There will be a more understanding from the customers that these kind of checks are going to be conducted, whether it's in the background or with their explicit consent. They may be more willing to provide the documentation required to gamble at those higher rates. It will just change as the new normal.
Thanks. Maris?
I would agree with Scott on most of those points, and I would say that RG, hopefully at least, will still remain on the top of the agenda. We had seen a huge change to when I started, when it was more seen as the necessary evil and the person that needs to be shut up, but now to a very vocal, you know, this is the way to go. So I think the biggest change that will happen within the next 3 to 5 years will be the customer expectations. Customers will expect us to act quicker, and they will expect to be treated in a very good consumer protection type of way.
Okay, and finally, Daniela.
So my wish for the future is that, I mean, RG is included in the customer experience and kind of handled automatically as a lot of other things. But then I also think that for like the industry, it's important to kind of being able to innovate and make sure that the products and offering is really good and goes hand in hand with RG and not kind of contradicting each other. So that I think is important for the business as well.
Brilliant. Well, it's 1 minute past 4, so we've just about kept to time. Thank you all for joining us today. It's been fantastic. Thank you to everyone who's listened in and sent your questions, and I hope we got through most of them, and I hope I asked them correctly. But yeah, thank you, and we'll see you on one of these again soon. Bye.
Thank you, Maris, Daniela, Scott, for your participation. Thank you, Dan, as well, for moderating and managing the many questions that came through our questions functionality. Thank you to our audience for sending those questions, for listening in, and to our sponsor, Bet365, for giving their support to this series. I do hope that you will join us tomorrow for the continuation of the webinar series, and tune in as well for all of the editorial insights that will be shared. We talked, for example, about game design. There is indeed article and focus and day of focus on that particular topic. Thanks again, and see you all tomorrow.